Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader in XAUUSD. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. My dear friends, what a move on the chart of gold was seen yesterday after the job openings data. US dollar slumps after weak data, markets betting Fed near end of hiking cycle. US dollar sank to a 2-month low on Tuesday as another round of weak economic data reinforced investor bets that the Federal Reserve is nearly done with its tightening cycle, even as other central banks are seen still raising interest rates to overcome persistently high inflation. And secondly, data showing US job openings in February dropped to the lowest in nearly 2 years, and the continued decline in factory orders undermined the dollar as the number indicated that rate hikes may be nearing an end. So as a result, we got to see a big drop on the chart of DXY. So overall, the market sentiment is not very positive for DXY. Both fundamentally and technically, the chart is under pressure. So as a result, we saw big jump on the chart of gold. We have been discussing about the possibility of a breakout for the last couple of days, but to be honest, I was expecting that if a breakout comes also, gold's limit would be around 2010, but gold made a high of 2023, and to be honest, it was completely unexpected for me. And right now you can see that gold is standing at 2020. Okay, this is the current market price. But before we proceed, okay, let's talk about the DXY. Right now, as you can see, the DXY is standing at 101.53. And as I said, that both technically and fundamentally, DXY is very weak. And the next important level for DXY is around 100.83. This is the next support for DXY before Friday. Friday is going to be a very big day because of NFP. So my dear friends, you need to be careful again because NFP is round the corner. So this should be the support before Friday, and during the day, if DXY tries to recover also, it will face some resistance around this area of 101.90102. Before I proceed further, I would like to give a big shout out to Chart Prime, who have sponsored today's video. Those who want to generate their own buy and sell signals, please watch the video carefully because Chart Prime is one of the best custom indicator in the trading world right now. With the tools available in Chart Prime, you can not only generate buy and sell signals, but also you can use these tools as additional confirmation in your analysis and take your trading to the next level. They also have a community on Discord where they post regular trading ideas. And my dear friends, probably you all have seen me talking about Chart Prime for the last couple of months. And my dear friends, trust me, their service is really awesome. My dear friends, as we all know it very well, that no tool, no trader, no company is 100% accurate, but with proper risk management and additional help from a tool like Chart Prime, you can definitely expect to earn some good money and change your trading completely. And to know about the functioning of these tools, you can simply go to their website chartprime.com, and under tutorial section you will find many videos. In case you are still confused about the functioning of the indicators, you can simply go to the Discord channel. You'll see that they conduct 2 weekly classes. In one class they teach about the functioning of the indicators, and in second class they talk about the strategies that you can use with the help of these indicators. So this is the 4-hour chart of gold in front of us, and as you can see that there are many signals generated by their tool Market Oracle. Possible reversal down means there's a possibility that the market will be going down, so you should go for a sell. Possible reversal up means the tool is saying that you should be looking for buy position. Possible reversal down means you should be looking for sell position. It may look like a magic, but my dear friends, again I'm repeating, no tool is 100% accurate. So proper risk management is extremely important. And prime oscillator is another powerful tool where you will see divergences. Those who know how divergences work, this will be very useful. I'm a fan of divergence. Okay, so this oscillator is a very powerful tool. Okay, and in addition to that, there are some other tools also, indicators like pattern detector, smart money concept. Okay, you can check them out later on. And the best part is the pricing. Okay, we can see that the pricing is very competitive in comparison to the other players. Okay, you can see that they only charge $57 per month, which is quite less in comparison to the other service providers in this category. Okay, at first you can simply try the tool for 1 month and I'm sure you'll love it. Use the link in the description to get 30% discount at the checkout. The discount is available on monthly and quarterly plans only. If you're looking for discount on annual plan, please let me know. I'll get it for you from the chart prime. You can also scan the QR code on the screen for faster registration. Please check them out. If you look at the US government bonds, then you can see that there was a big drop on government bonds, and we discussed about government bonds around a couple of days ago that the next low of US government bonds will be very important. Though there was a big drop on the chart of bond, but still it is trying to maintain the low here. You can see that government bonds is still not going for a lower low. Okay, so overall government bond is still trying to recover, and this may bring some hope to the gold sellers. Okay, watch the chart of US government bonds carefully. If government bonds tries to recover, then that can be a good news for the gold sellers. Now let's talk about the chart of gold. So gold made the high of 2020. So as I said, the market sentiment of dollar is very weak, and bond market is also under the pressure. So as a result, both technically and fundamentally, gold is extremely bullish right now. So in this market condition, taking a sell position can be very dangerous and very risky. In case there is a resistance, then you can look for some quick selling opportunity, but holding a sell position in this market situation can be dangerous, and maybe you will end up losing your capital, because I know many people who have lost their capital yesterday because they were having sell positions, and when gold formed this big candle, their accounts were blown. So if you are having a buy position right now, I'll say that be on the trade. No need to exit from the position, because further upside is possible. At least the next level for gold is 2050. 2050, because of the ongoing market sentiment. And if gold breaks 2050 level, then it will head towards the previous high of 2070 because of the market sentiment. See, market sentiment is the most important thing. The levels do not work, okay, when the market sentiment is on high power. So as a result, in this market condition, you should be looking for buy positions only. If you are looking for fresh trading opportunities, then I'll say that let the market come down, let the market come for some correction. So if you see market coming down to 2010 level during the day, 2010 to 2007, observe the market. High chance of market taking support. If market takes support according to expectation, go for a buy position. For confirmation, you can use the 1 hour time frame or 15 minutes time frame. Observe the 1 hour or 15 minutes time frame. If you see market is showing price rejection from below, go for a buy position with risk management. Okay, and in case market shows strong correction, okay, strong correction, and the size of the candle is big enough, okay, and if you see market breaking 2010 level also, so if possible, okay, try to avoid any sell position, because that can be risky, because one 2 or 3 red candles, okay, will be engulfed by a one green candle in this type of market situation. So as a result, okay, try to avoid. And if this level fails to work, then we have another level around 1996. Around 1996, we have the second retracement level where you can expect the market to take support and bounce. I am right now using the 4 hours time frame for confirmation to observe the candlestick pattern or price rejection from below. You can use the hourly time frame because 4 hours time frame will be very slow. So in this market condition, we need to follow the trend of the market. We need to understand the market sentiment and trade accordingly, which is bullish. So as a result, I'm recommending buy positions only at retracement. Two levels for the day are 2010 and 2007. This is the first level, and the second level is 1996. These are the two levels where you can look for some retracement in the market. In case market starts going up without retracement, if market starts going up without retracement, you can go for a buy position at the breakout also, but be careful, and if possible try to take a small lot size, because every market will come for some retracement at some point. Okay, so no market in the world goes up in a straight line, goes down in a straight line. In case of a news market, then that's a different chapter, but otherwise market will come for retracement, and that is the best opportunity to go for a buy position. So again, I'm repeating, if market goes for a breakout also, be careful. If you see that okay, breakout is very convincing enough, you can go for a small lot size, but yes, try to look for a buy at retracement. That is the most safe trading opportunity. If you're wondering about resistance, then yes, there is no resistance in the market as of now. 2050 is the next level if the same trend continues. Okay, so be careful. If you're holding a sell position, try to come out of your sell position, because that can be fatal to your capital. Already many people have lost their account. Please don't make the mistake. My dear friends, this is my analysis. I can be wrong as well, so follow proper risk management. Do not gamble with your hard-earned money. Bye bye, take care.